The lead story on CNBC.com right now, if you go to it, is that investors may be betting that even if the impeachment inquiry and impeachment itself moves forward, that investors are optimistic that the stock market could still go up a la 1998 when Bill Clinton was impeached. Do you buy that angle?
I do buy it, so, and it's interesting. This morning here in Chicago, we are seeing the futures, the S&P, up again. It's really interesting to see when this initial impeachment conversation came out, the market only went down 1%. So I think the Democrats, they've been racing to impeach probably about a day or two after Hillary Clinton lost. And here we are now with another impeachment. But I think the market has become desensitized. So we're really focused on the Chinese trade tariff conversation. And President Trump, to his credit, he's really trying to focus investors and market attention on the upcoming trade tariff conversation. But the impeachment conversation, I don't know how much historical data we can use with Clinton, but at the end of the day, it's not the focus of investors here, and we're really seeing that reaction in the bond market. No one is really concerned that we're going to see this deepen.
Yeah, Brian, I've got a question for your market experts. I'm not one, but what I wonder is, if you look at the rest of this Trump presidency and you're concerned about a distraction factor, what is it that the market was looking for from the rest of the Trump presidency, right? The market already got the tax cuts, which it liked a lot. So moving forward, there was the president's trade agenda, which it seems to me the markets didn't entirely love. Some parts of the market did. And then there's USMCA. And maybe that's it. So I wonder, from a market perspective, what they were hoping to get out of this presidency that might be disrupted by this impeachment if the president is distracted and not able to focus.
Well, I think that's a great question. One of the things that's not really talked a lot about is the fact that he's been really, really critical of the Federal Reserve. That criticism, let's remember, last December, we saw a very hawkish Fed talking about 3 interest rate hikes. Now, all of a sudden, the president continues to criticize, obviously a little bit over the edge on the criticism, but that has really helped the dovish stance. So I think we need to continue to see that type of rhetoric to have the markets move higher. But this is a China-U.S. trade deal. If we get anything, any type of W, and I think with all this new impeachment conversation, I think he's going to push a little bit closer to claim that victory in some type of trade deal. Maybe it's a mini deal, but I think that trade deal is what the market wants and what the market needs to take the next leg higher.
So does that mean impeachment is actually good for the market in that sense, that they see the president as more likely to go for a trade deal even if it's a small deal?
So I work with a lot of financial advisors around the country. They've kind of pressed mute on the whole impeachment conversation due to the fact that they don't think it's going to have the effect. And maybe we become too calloused because we've had so many conversations about impeachment in nearly the last 2 years of President Trump's presidency. But I think money managers are really focused on what's going to happen in Q4, because if we do see a trade tariff conversation, it will really press mute on this whole conversation of impeachment, and we could see a Christmas rally, a Santa Claus rally of all Santa Claus rallies.
Well, I'm going to go to Steve in a second, but Eamon, I talked to an investor yesterday. He said, hey, listen, the worst case scenario is President Pence, which the market maybe doesn't think is that bad of a thing anyway. Steve Sedgwick, I know you're in Ukraine right now, but listen, you're living through, in your home country, the great United Kingdom. You're living through all this political turmoil as well, and you've gone through a couple of prime ministers the last few years, and yet the FTSE 100, your Dow Jones Industrial Average, is up 9% this year. And this morning it shows that investors can separate the political stuff from the fundamental stuff.
Brian, it's not often I disagree with you, but may I beg to do that at this moment in time? Because I think the reason why the FTSE 100 is up is because the pound is down. You've got to remember, before the Brexit vote, the pound was around about 145 on the cable pairing versus the greenback as well. It plummeted down to its low at around about 118, then got itself back up to the mid-120s again. When the pound goes down, all those dollar earners in the FTSE 100, the BPs of this world, the GlaxoSmithKlines, the Royal Dutch Shells, these titanic dollar-earning companies, they suddenly look a lot better value to international investors. So I'm afraid to say, I think part of it is the mechanics. Many people actually would say, with a wait for it, mouth-watering yield of nearly 5% on the FTSE 100, that actually it's undervalued. And the reason why they're not buying more of it at the moment, is not up more than 9%, is because of this Brexit turmoil, which just goes on and on and on.
But
and
did you
seen the scenes in the House of Commons yesterday, they were utterly chaotic.
My friend, did you actually disagree with me? Because yes, the pound went down. I don't. The market. If the markets and dollars go up, our viewers here that maybe have invested in the UK, it's not like they're sitting around the dinner table eating their, tea and crumpets or whatever, and saying, "Oh well, we've made 9% on our money, but it's only because the pound is down." You still made money, regardless of the reason why, even with all the political turmoil. Maybe? No?
Yeah. And you're right. And they still get 14% because they get 5% dividend yield on top of that 9% as well. So that's a hell of a return. It's a hell of a risk premium for a market that is amidst a great geopolitical tension. Just to remind myself again, how many trillions of dollars worth of bonds are in negative territory out there? 14, 15, 16 trillion dollars worth. Isn't it extraordinary? You can find 5% yield on any blue chips with good cash flow and good business models anywhere in the world. That's a big risk premium to get 5%. What do you get on the S&P?
I would jump in from Chicago for 1 second. I would say high tide lifts all boats. Look at the U.S. domestic equity market. We're up nearly 20% in the S&P 500. That's part of the reason why your FTSE is up nearly 9%. But I think this is a risk-on environment. If it's the ECB continue to be dovish, coming with more stimulus, if it's the Federal Reserve here, we are in an accommodative situation where we continue to see risk on. That's the bottom line going into Q4.